Richard, Rolls-Royce used to be synonymous with quality and reliability. These days, financially at least, it's synonymous with anything but. There's been another profit warning today. What's the company said now?
Warren East, the newish CEO who came in July, says that profit this year will be at the lower end of guidance, and previous guidance was between 1.3 and 1.5 billion for the full year this year. But the real warning comes in next year's results when he says that profits will be hit by a 650 million headwind. Now, you and I know how much Lex hates gags about aeroplanes and headwinds and turbulence. Indeed. And things like this.
Pretty awful.
This is a real problem for Rolls-Royce, and its shares fell by a fifth today. A fifth of its market cap gone.
That's a huge fall in value. What exactly is going wrong? Where are these headwinds coming from?
Okay, so there's nothing wrong with the balance sheet at the moment, and there's nothing wrong with the order book, particularly. The large engine market is still there and it's still cooking. And passenger numbers are still rising, so people like Boeing are still expecting huge numbers of new aircraft to be called for in the next 2 decades. What's going wrong is in what we call the after-sales service business, or the aftermarket business, where Rolls sends out parts. This is a very high margin business. It sends out spare parts for engines, and what's happening is that existing planes and gas guzzling, fuel burning, noisy older planes, older 777s, probably an older Airbus A340s, are being parked off in that desert in the US, and they're using much newer, more fuel efficient planes. So Rolls is losing out on that aftermarket there, also in the executive or corporate jet market, and also in the regional jet market, which is those smaller planes that feed the hubs up to about 70 passengers. And then last but not least, oil. Its marine offshore business is also hurting.
I guess Rolls can't have it both ways. If sales of new engines are doing very well, and that suggests that clients are using newer planes and so parking up the older ones, which, as you say, is no good for the aftermarket. But what can Warren East do about all this? If this is the way the market is moving, he has to move with it, no?
Yes, the thing is, he genuinely seems shocked by this, and Rolls-Royce as a whole seems to have been taken slightly by surprise by the sharpness and suddenness of the tail-off in the aftermarket. What he can do and what he's started to do, he's in the midst of an operational review. He can cut costs, textbook stuff, start cutting costs, get rid of a few people here and there. The other thing he's got to do is to make pretty sure that his engineers are a whole lot more productive than they are. Rolls-Royce, as you can imagine, is a long lead time business with lots of development stuff, lots of engineers knocking around. They need to work a hell of a lot harder for the same whack. And then also there's a what people call delayering or simplification of the business. And this seems to go to the root of the problem. It seems that they've got fantastic sales agents at the Dubai show, but the orders seem to get lost in translation.
It sounds like Mr. East has a long way to go if he's going to rebuild Rolls-Royce's reputation. Richard, thanks very much.